Well, a hefty sell-off across the globe. What's in store for our markets? What should be the top trading recommendations to watch out for? Let's connect with our chartists. Dr. C.K. Narayan and Gaurav Bissa joining in. Dr. Narayan, good morning. Not looking that good when it comes to the handover that we have, but what is it that you're working with by way of levels? Do you think that we're in store as well for, some sort of a very decisive move on the downside? And in light of that, share with us your top trading recommendations.
Good morning, Avan. Good morning, everybody. I think it might be a little premature to pronounce the market dead in terms of the short-term trend and to expect, substantial declines. Now, the market is down 115 points. That's because it's following the pathway set by the Dow. Now, we had this huge fall on Monday without any rhyme or reason. Now, it seems to be the turn of the Dow and the Nasdaq. It was actually the Nasdaq which fell 5% and the Dow followed what the Nasdaq did. Now, what the reasons were, they may have been specific to America, but then that has a reverberation across the world also. Now, we have already been down to these levels. The lows, if I recall correctly, on the SGX last night was somewhere around 11,375 to 11,380. This is on the SGX Nifty future. Now, we have been at that level already as of Monday, and I think that zone between 11,250, 350 is where I have mapped out that there is a decent amount of support available for Nifty. So having visited those areas already once with a very strong and broad-based decline, whether we will go down and break that seems to be a little difficult because the trigger point is coming from overseas, which most people do not have too much of an inkling. Now, that said, it will definitely put the lid on the the moves upside. So I don't think until we see some strong price action to the top side, 11,600 is going to be crossed in a hurry. So my sense here is that we may revisit the area around 11,250, 300 at worst, and then we'll have to take it up and see where it goes. That as a background for today, I have a mix of a long and a short for a trading call. For the long side, I am picking Bata India, which I think has been setting up decent looking patterns. Sustained sideways consolidation going on for a couple of months now, and within that some small accumulation patterns and a breakout from the same. Now, it would have helped, of course, if the market trends were good and that breakout would have succeeded. Perhaps it may take a day or two more, but then Bata is definitely sitting on that particular breakout area. So that's a stock I would want to buy at current or on dips, etc. Now, I would maintain about a 15-point minimum stop loss from my entry, wherever that may be in today's situation, and then look for a target which should be about 30 rupees from entry. For the short side, I am looking at Page Industries, which seems to have developed suddenly some weakness in the daily charts, as it were. Monday's sharpest drop was followed up by fresh drop yesterday, when the markets were not really so badly off. So I think a break of the current level, say somewhere around 19,200, etc. If it were to break those levels, which it will, I think, with a weak open, I think that stock should head down to about 18,800. So initiate short with a 200 rupee stop.
Okay, a buy on Bata, a sell on Page Industries. That's the strategy from Dr. Narayan. Gaurav, what about you? Do you think that the markets are in for a sort of a choppy session today? And share with us some of your top recommendations. You've got a buy and a sell call too.
Good morning. I agree with what Dr. C.K. Narayan said, that we already had a fall, and at that time we were contemplating why we witnessed such a sharp fall, whether it was because of domestic issues or what. However, 11,343, these were the levels where Nifty were finding a lot of hurdles, and then we saw a gap up opening happening, and we saw levels of 11,750, we revisited those levels, and now we bounce back quite strongly. That is where the daily Kijun is also placed. So as long as we are holding on to those levels, we are not closing below that. I would be a little bit optimistic that we can see some more upside. We can see at least a jump. I'm not saying that we are going to shoot to 11,800 again, but yes, there can be some sort of stability that can be seen on those levels. Having said that, it is going to be quite volatile, because if you see last few days, the sector participation, especially from the banking side, that has not been up to the mark. And as long as Bank Nifty does not participate, Nifty does not have too much of legs to rally. So in my opinion, we can see at the best a range bound move at least for this week. And on based on that, I have a buy and a sell. As you mentioned, the first recommendation, the buy would be on Adani Ports. We have seen a strong rally coming in Adani Ports. It's forming what we call as a cup and handle pattern on the verge of a breakout. You buy a ball levels of 367 for types of 380 to 385. Keep a stop loss of 360. Second would be a sell on IBOL Housing Finance, where we have seen a rising trend line breakdown already happening in the name. It revisited those levels, so there has been a retest of the breakdown level, and it's again falling down. So stoppers of 205, targets of 190.